Welcome back everyone, Michael here with Offshore Citizen. I'm going to discuss with you a little bit today the difference or some contrast between international tax planning and domestic tax planning. And this is inspired a little by a conversation I was having with a client earlier today actually. And they had discussed some things with tax planners on both sides of the border and ended up getting some somewhat misleading advice. And this is liable to happen for a variety of different reasons, and so I'm going to kind of walk you through what's important to understand, because there is this really significant gap that if you can understand it, it can be really useful. If you don't understand it, it can be very hurtful, or at least deny you some opportunities. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notifications. I really appreciate your support. Thank you for subscribing. If you'd like help with international tax planning, asset protection, forming companies, opening bank accounts, getting residencies, citizenships, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below, or send a message through our websites, offshorecitizen.net and offshorecapitalist.com. All right, so anytime we're paying attention to domestic tax planning, usually we're looking at a particular sphere of things going on, and it's pretty easy to define because the rules are all baked internally. Now, sometimes certain countries don't define certain terms in statute, so you'll end up with something like, the term residency, which is not defined in statute in a lot of countries. It will be kind of a question of fact, or you'll have something like source income in a country like Malaysia, which is not defined. And again, in these cases, you have to kind of look at case law, and sometimes there isn't case law, and it's a little bit confusing, etc. But usually, domestically, it's fairly easy to understand. Now, you can think of domestic tax planning as like operating within the box, okay? And within the box, there's a certain set of rules, and that set of rules is, it is what it is. Usually there's, some loopholes here and there, but really you try to optimize within that set of parameters. And local accountants and tax attorneys are usually pretty good there. Now, to be fair, there's a spectrum of professionals in any different field. And so, whether you're going to find a good one or not is a whole other conversation. But generally speaking, at least it's something that you can look up. It's you can get resources. When you're doing international, you have another challenge, which is you don't just have that, you also have another one, right? So now you have to look at two boxes, maybe more, possibly 3, 4, 5, however many are engaged in what it is that you're connected to, right? Okay, fair enough. So we have to go and look at, let's just use for simplicity's sake, 2 boxes, right? Well, that should be fine, isn't it? Not necessarily. Here's why. So the thing is that you're not just concerned about box A and box B, you're worried about the interrelationship between box A and box B. And these things don't necessarily match properly. So the set of rules in A and the way things should work that way might seem one way, and the set of rules in B and the way they should work that way might seem another way. But then you have the relationship where the way that things work in B, when it's coming from or going to A, could be different than it is on A side or B side. Does this make sense? So this is it's kind of a throw off. And if you don't understand that, you'll go off and get the wrong, kind of the wrong treatment, right? I'll use a simple example. In the US, you have a US LLC. Fair enough, very simple, right? In Canada, there's no US LLC, or there's no LLC period, okay? So it's a legal form that does not exist in Canada. So what is the consequence of this? Well, when a US LLC operates in Canada or does business with Canada, or is owned by Canadians, etc., Canada has to figure out, how do I treat this entity that doesn't exist within our legislation, right? They're not just going to ignore it, so they're going to say, well, how do we treat it? Now, it turns out in the Canada-US relationship, with a US LLC, Canada decides to treat that LLC as a corporation. Why is this important? Because if you look at it from the standpoint of, say, the US will say something like, for instance, an LLC can't pay out dividends, right? Because an LLC is a pass-through entity, assuming it's a single-member LLC treated as a disregarded entity and it hasn't opted to be treated as, say, a corporation. But just based on the default treatment, it can't pay out dividends. So you might say, okay, well, that's the way that it is, right? But on the Canadian side, the LLC isn't an LLC because they don't have any LLCs. So from the Canadian perspective, the LLC is a corporation, which means that every distribution is treated as a dividend unless it's treated unless it's specifically like wages or payment for services or something like that. And so on the Canadian side, that's how they're going to treat it. Now, this is like a completely different match, and all of a sudden can create kind of some confusion if you don't understand A side, B side, and the interplay between A and B. And note that that interplay might change country to country. For example, if you have that same US LLC and it's doing business or owned by, etc., an Australian, then for Australia's purposes, Australia treats an LLC as a partnership. And so it gets a different treatment, okay? And so you need to understand these things anytime you're setting up international structures. And it's one of the reasons why, you know, the nature of how people learn tax normally is that they learn a particular tax code, right? Like, where is the school that teaches the rules between countries? There isn't one, right? What happens is, even if you go to the best schools, if you go to somebody who worked with me for a long time, has been on my team for many years, did their master's at Georgetown in Washington. It's the top international tax, or I think the second top international tax program available after NYU. Very, very good, very prestigious, high-level people, etc. But what is international tax when you go there? It's international tax from an American perspective. So yeah, you'll learn about GILTI tax. Yeah, you'll learn about a bunch of different things. But what you won't learn about is international tax from kind of the both sides and the interplay between them, which is kind of this important place that there's potentially lots of opportunities and potentially lots of pitfalls. So yeah, that's something that is really, really important for you to understand as you go down the road. I know it's something that I struggled with when I first, like before ever doing this business, I was doing business, investing money, raising capital, etc., between Canada and the US. And I remember this was the frustration. I'd call people in the US, I'd say, hey, what should I do? They would say, do this. I'd say, oh, but I'm from Canada. I'd say, oh, then I can't advise you. I don't deal with that. I'd call somebody in Canada, I'd say, hey, what should I do? They'd say, do this. I'd say, yeah, but we're investing in the US. They're like, oh, then I can't advise you. And so understanding not just both sides, but the interplay of both sides is really, really important. And that's really, to me, like the heart of what international tax is about. So anyway, I hope it helps. I hope it's something to consider. Obviously, you know, you have to look at all of those case by case because each piece can be its own thing. Another example of this is I would sometimes have somebody come to me and they would say, hey, this is, for example, Canadians who are doing business in the US. Should they form in Canada or should they form in the US? It's like, well, actually, once you cross the border, there's no reason that you necessarily should form in either. You know, maybe you should be in Hong Kong. Maybe you should be in Malta. Maybe you should be in, you know, UAE. Maybe you should be in UK. Maybe you should be, you know, as soon as you start crossing borders, then you enter into this whole different world of possibilities. And it might be that none of them make sense, and you just want to simplify down to the basic kind of ones in front of you. But it really depends case by case. So I hope that helps. If you have any questions about it, feel free to reach out, put them in the comments below, and I'm going to look forward to seeing you guys on the next video.